Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, I'd like to talk about the equity markets. Equity markets are on fire to continue to go higher. No shortage of people calling for a top, but equity markets are going higher. And more specifically today, I want to talk about all the gap ups we're seeing. I mentioned this over the last few weeks in different industry groups where we're seeing these gaps, but I'd like to talk about is how do you play these gaps? And the gap is simply, if you look at a chart, all of a sudden you see a space and a price moving a lot higher. There's news that came out, in this case, a lot of times those earnings, where the market completely mispriced the stock and the stock gapped higher. Now the question is, do you buy those or how do you buy them? Because are the institutions loading up on the stock at those higher prices? Or are they starting to sell off and using that as a liquidity event? So for instance, let's go over a few examples here. So Applied Micro Devices, AMD, gapped up 14% on earnings, 200% increase in volume, closed at 1835 that day. It immediately held that gap the next few days and never violated that level. So you don't buy it that day on the gap day, you wait to see the next day if it can hold it. And you buy it and you use that gap price more or less as a stop, 1 or 2% below that, because if the trade's going to work, it should hold that gap closing price and tells you that people that jumped in that day are serious about defending that price of the stock. And AMD pretty much moved up probably over 20% since that time in just a period of a few weeks. Now look at the trade desk symbol TTD. That gapped up 37%, 200% increase in volume. Closed at 127.93. It looked like it was going to hold that level for the next day, but it failed 2 days later. And that's okay, you can let it go, but within about 6 trading days, it recaptured that volume. That told you you could go back in there and buy that at that high price and use that as your guide, your danger zone, that 127.93. Give it 1 or 2% wiggle room. And again, that trade's working out. 3D Systems, symbol DDD, jumped 32% on a 700% increase in volume, closed at 1796. The next day it held that level and never violated it since. So again, that tells you can go in and jump those, buy those big jump up gaps, and those prices are being defended. Now another new trade we did just Friday is Alteryx, symbol AYX, gapped up 15% on earnings, 353% increase in volume. Now the next day couldn't really hold that price, but didn't really give up, just gave up a few percentages, moved sideways for 2 weeks, and Friday recaptured that level. I believe it was 55.33. So that tells you can go in and buy that, use this 55.33 level as a guide, 1 or 2% below that'd be your stop. So the beauty of these trades is that there's a very low risk, high reward ratio, meaning you know the line in the sand is that's pretty much that gap up price, 1 or 2% below that. Now, as a disclaimer, we own all these stocks. None of these are trade recommendations. You should always consult your financial advisor. But as the saying goes, if you want to own strong stocks, you got to buy strong stocks. And you know, there's a lot of volatility, but again, this gap price gives you the line in the sand, tells you where to play it, and where everyone's scared to buy new high prices, that's where the strength in the market is. So as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors, reporting to you from CME Group trading floor in Chicago. Have a great trading week and mind those gaps.